Welcome back to our channel. In this video, we are going to be talking about a very simple strategy that derives its entries from continuation patterns. But before we talk about anything, I would like to remind you that Forex trading is a system that was designed by smart people of transferring wealth from the impatient to the patient. So you should always remember on which side you want to be, on the patient or the impatient. Alright, so let's get straight into the content. The first thing that you need to do is to count levels. If you have been following us for quite a long time, you know that we trade the institutional market maker method. That is a method that actually demands us to count levels and to observe cycles. So a level is basically an impulsive rise or an impulsive drop. If we are on the H1 time frame, we may say a level is a day of rise or a day of drop. But what is very important is to see an impulse rise. So in short, a level equal an impulse rise equal a day of rise or drop. In this case, we had a level to the upside and another level to the upside, which was a day of rise and a day of consolidation, and then the last impulse to the upside. So within this particular strategy, we are not interested in trading from the peak formation highs or peak formation lows, depending on the market context, but to trade as continuation, to trade the continuation patterns that comes after a cycle has been completed. The continuation pattern is defined as a reset within this methodology and is seen at the region of the 200 EMA. In this particular case, my 200 EMA is the moving average, exponential moving average in white, 50 EMA in blue, 13 EMA in red, and 5 EMA in yellow, then 800 EMA in dark blue. But for this particular strategy, we are only going to use the 200 and the 800, lastly the 13 EMA for entry confirmations. So after a cycle completes, we will be only anticipating to see continuation patterns like having a W or an M depending on the market context. So what we mean is we need to see first leg being demarcated by a neckline that retests the 50 and then creation of the second leg. So to just remember, we are saying first leg retest of 50, second leg. That's the structure of the W or M that we'll be looking for. So in this case, we had a drop and we were anticipating to see a continuation pattern. In this particular case, we had first leg neckline as retest to the 50 or pullback to the 50 and then creation of the second leg, and our entry will be at candle closure, H1 candlestick closure above the 13 EMA like that, and our stop loss below structure. Then this trade should be held for the next 3 days or 3 levels to the upside or the particular trend direction. In this case, we had level 1 from this entry, then level 2 from that entry, and then at level 2, we look to put our stop loss at break even so that we have a risk-free trade running to remove that mental pressure. Then the third level, like that. At level 3, that is when we actually close off our trade. After seeing 3 levels to the upside, and we've said even to the downside, we expect to see a continuation pattern with the direction of the previously completed cycle. So in this case, after having this, within the future, we are expecting to see a continuation pattern in an upward direction because there are 3 levels to the upside. At the 200 EMA, when price reaches the 200 EMA, we start to look for the structure. First leg retest of 50, second leg. In this case, first leg retest of 50, second leg was issued. So at candlestick closure above the 13, that is where we will make our entry at this point. Going forth, we start to count again the levels so that we get and exit. We had level 1, then the market moves. At level 2, this one, we expect to get our stop loss to break even so that we remove the mental pressure. Level 2, our trade is at this point. And then at level 3, that is where we close off our position. Right? After 3 levels to the upside, what do we expect? A reset at the 200 EMA with a structure of first leg, retest of 50, second leg. Right? So at this point, we had first leg, retest of 50, second leg, and we were going to make our entry. Right? This is a very good point to come in our backtest like this. Why? Because it actually informs us that the market can go otherwise, even though we have fully analyzed. In this case, the market went against us, and that was okay. Restarting our account, we can see that we had another cycle where we had level 1 to the upside, level 2, and then third level to the upside like that. 3 levels of rise, we expect a reset at the 200 EMA region with a pattern. Our defined pattern is first leg, retest of 50, second leg. In this case, a W was issued. But as I've said, Forex is a system that was designed to take money from the impatient, giving to the patient. In this case, someone will be tempted to trade off this strategy's rules and takes a buy. And if this trade works out, it's actually a cycle to disaster. Because every time you are going to see a trade pattern that is off the rules, you are going to take it, and most likely you are going to get a trade that will be a loser, or that will actually lead you to losing, probably giving you more confusion. So there was no trade there. Then we start again the count. Level 1, level 2, and then the last level, which is this one. 3 levels to the upside, we expect to see reset at the 200 EMA. First leg, retest of 50, second leg, entry at candlestick closure above the 13, and the market went our way like that. Right? So basically that is what you'll be looking to see. In this case, we can as well see that at the current point where pound USD is at, we can see that we had a completed cycle, which is from this point going to the upside. Please check out our free Telegram channel. I'll leave the link in the description box below. I actually give a lot of advice within that free channel. Completed cycle, and then from that completed cycle, first leg, retest of 50, second leg, and the market went our way. Basically, that is what we had for today. It's actually a simple strategy which anyone can replicate. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and see you on the next one.